Hey everybody, I'm here with one of my favorite lenders in the OKC area. Dean, do me a favor, introduce yourself real quick and tell us just a little bit about yourself.
Dean Riddell, SWBC Mortgage, been here 14 years, in the industry 30 plus years.
Awesome. I've sat down with this man on several occasions. He is a wealth of knowledge, and quite frankly, he could take up probably about 45 minutes and we would just scratch the surface on what this guy knows. But today specifically, I wanted to talk about something that maybe first-time buyers are a little nervous about. You and I have had this discussion, and you've boiled it down to three things that first-time home buyers can do and be very cognizant about in their home buying process. Can you tell us about that?
And Mike, I think that the key thing is the consultation with your lender, trusted source. What we try to manage to is managing to your monthly payment, down payment, and also setting money aside. The pitfalls we see on this end is a lot of clients want to liquidate their available monies to buy a home, which in essence can put them in a bad spot with what I call the curveballs in life.
Yep, absolutely. And then there's a product on the market right now in the lending world that not a lot of people really understand, a 2-1 buydown. Dean is kind of the pro at these, and so tell us real briefly what a 2-1 buydown is in some kind of regular layman's terms, because you're very good at that, taking all of the jargon that we hear in the lending world and boiling it down to what it really means for people.
It is tough to do by video, but I'm going to swing away. It is tough to do by email. It's tough to do by phone. And we accomplish that by the consults that we have with our clients. But in essence, a 2-1 buydown, you're taking today's market rate of 6 3/4, dropping it down 2%. Payment 1 through 12 is based on a rate of 4 3/4. Payment 13 through 24, year 2, is based on a 5 3/4. The math computation comes in to compare that principal and interest based on that loan amount, not sales price, at the 6 3/4 compared to the 4 3/4. Take that number, $300, let's say, divide it or multiply it by 12, $3,600. Now do that 6 3/4 to the 5 3/4, and that may be $2,400. Add those two together. That piece, though, Mike, has to be paid by the seller or lender if there's enough money premium available to do it. Most commonly, it's paid by the seller.
Yep.
I touch base. We've done 8 or 9 of these in the last 60 days. But it's the understanding of that rate and that math that I think is missing within the industry.
One of the key things that you said that I believe is fully important, you and I really agree on this, is a lender consult. And by that, you mean in person, sitting down, face to face, belly to belly, talking about the best potential situation for you.
Absolutely.
So that is hugely important.
Yeah.
No matter who you work with, make sure you have that sit down with them. Dean, thank you so much for coming on and telling us about the first time buyer tips and the 2-1 buydown. Thanks again.
You're welcome. I appreciate it.